not a new floor. In fact, you would imagine that Coinbase would be gaining value because FTX, one of its biggest competitors, is no longer in business. Plus, one of the things that everybody is claiming is that we need regulation. Of course, we need it like a hole in the head, but everybody says we need to have more regulation in crypto, and Coinbase is regulated. Coinbase is a publicly traded company in the US, regulated by the SEC, so it should be the new favorite to win from the FTX demise because it has what everybody claims we want. It's regulated, so investors don't have to worry because you've got the government's good housekeeping seal of approval. But instead of benefiting from the collapse of a major competitor and the fact that it is regulated, it is suffering too. In fact, one of the people who is pounding the table the hardest for more regulation in crypto is Kevin O'Leary. And one of the things that's really bothering me about Mr. Wonderful is that he's acting as if he lost money on FTX because he lost $15 million. Well, what Kevin O'Leary doesn't like to acknowledge is the fact that the money he lost was the money he was paid by Sam Bankman-Fried to pump FTX. Yes, he took the money that he was paid and used it to buy FTX tokens and to invest in FTX, the company. But he wasn't investing his own money. He was gambling with the house's money. Or more correctly, he was gambling with the money that Sam Bankman-Fried stole from his customers and gave to Kevin O'Leary to promote FTX. Now, according to Kevin O'Leary, he didn't even invest the entire $15 million that he got from Sam Bankman-Fried. He only invested about $10 million, so he was able to keep $5 million, but he ended up having to pay that commissions and taxes on the $15 million of income that he earned to be a promoter of FTX. But for him to be going out there now and pretending that he actually lost money, he lost nothing other than his reputation. But other people did lose real money. They weren't paid by Sam Bankman-Fried, and these people are a lot less wealthy than Kevin O'Leary. They took their hard-earned money and put it on the FTX platform, and they lost it, in part because of Kevin O'Leary. It's possible that some of the people who lost actual money in FTX, the reason they chose to open up an account at FTX and deposit their money or their crypto there was because of Kevin O'Leary's endorsement. So rather than pretending to be one of the victims of this scam, he should acknowledge his own culpability in helping to perpetuate the scam. Whether he knew it was a scam or not, he was paid to promote a scam, and that was probably one of the reasons he didn't do all the due diligence that he should have. And I think he should have been more forthright when he was publicly talking about how great Sam Bankman-Fried and FTX were. He should have disclosed that he was paid $15 million to express that opinion. Also, despite the collapse going on in crypto and Coinbase hitting a new record low, hardcore Bitcoin fanatics remain as enthusiastic as ever. I was listening to this interview with Max Keiser, who had predicted that Bitcoin would finish the year above 200,000, yet he has not tempered his enthusiasm one bit, nor acknowledged his mistake. Looking at Bitcoin in December, trading at around 17,000, no, as far as he's concerned, nothing bad has happened. Bitcoin is as strong as ever. In fact, he was scolding anybody who is complaining about their Bitcoin losses by saying they're just speculators, they're not investors. He said, if you don't have at least a 4-year time horizon, you have no business in Bitcoin. You should just take your money to a casino and gamble. Well, Max Keiser doesn't know the difference between investing and speculating because buying Bitcoin has never been an investment. It's always been a speculation. There is no return on Bitcoin. You are simply gambling on price appreciation. And now he claims that Bitcoin gamblers were in fact investors and they should just hold for the long term, like Warren Buffett, whose time horizon is forever. The difference is Warren Buffett buys income-producing assets. He buys businesses that he thinks will survive forever, earn money forever, and pay dividends forever. Bitcoin doesn't earn anything and doesn't pay anything. It's not the type of asset that Warren Buffett would hold forever. In fact, Warren Buffett himself refers to Bitcoin as rat poison. So it makes no sense for Max Keiser to invoke the name of Warren Buffett as he is pumping Bitcoin. In fact, one of the other lies I heard Max Keiser tell about Bitcoin was the economic boom that is supposedly going on in El Salvador because they were smart enough to make Bitcoin legal tender. El Salvador is suffering dramatically. The losses are huge as a result of this blunder into Bitcoin. But not only is Max Keiser in denial of this reality, but in his mind, he has actually concocted an alternative reality in which El Salvador is thriving. Turning to some of the news on the week, on Friday, the Biden administration announced that it was approving a $36 billion bailout for the Teamsters' underfunded pension. There are about 300 pensions, and that amounts to better than $100,000 per person. Now, this should infuriate so many Americans who don't even have pensions. In fact, a lot of Americans earned a lot less than the Teamsters and have no pensions. Why should they be forced to subsidize the overly generous pensions of overpaid Teamsters? One of the ways you know that they were overpaid was that they didn't contribute enough into their pensions. They were promised a pension where the benefits far exceeded anything they contributed. So they were able to enjoy higher wages because enough money wasn't deducted from their pay to meet the obligations that they expected from their pensions. And the American taxpayer should not be on the hook to make up that shortfall. What should happen is that either current retirees should accept reduced benefits, or current workers should be making higher contributions into that pension so that the people who are retired can get their money, or the companies themselves that made commitment to their workers should have to dig into their own pockets and make the additional contributions into the pension. The losses should not be shifted to taxpayers, and more specifically, not taxpayers, because nobody's taxes are being raised. All the money to bail out the Teamsters pension is just going to be created out of thin air. It's just more debt that's going to be monetized, so it's more inflation. So every American will end up paying, but these losses should not be borne by the entire American population because most Americans did not benefit from this pension. That each Teamster is effectively being given $100,000. That amounts to a massive welfare payment being distributed to a small group of Americans paid for by the entire population. Now, a lot of people would say that it's not fair if the Teamsters have to suffer a reduction in their pension. Well, sure, life isn't fair. But what's a lot more unfair is forcing other Americans who don't even have pensions to pay so that the Teamsters can have even larger pensions than what they're actually entitled to based on the amount of money that they've actually contributed into their pensions